What is up? We are back getting into the juicy, squirty, cummy shit, okay? We're back talking about one of the most important confluences in trading, a break of structure, okay? Now, a lot of people look at the charts and they think they know what a break of structure is right away. Like, oh, we stopped going down, right? It is so much more than that, and you can have a break of structure on the 1 minute, the 5 minute, the 15, the 1 hour, the 4 hour, the daily, the 30-second, okay? The break of structure is very important for 90% of strategies, okay? A lot of people put a liquidity sweep, an inverse fair value gap, a fair value gap, and a break of structure into a strategy, okay? And have a very good win rate with it. But without that break of structure, it's nothing, okay? And same thing with liquidity sweep. Without that liquidity sweep, it's nothing. Without that fair value gap, it's nothing. They all go hand in hand. So that's why you need to know every single confluence like the back of your hand. So when I'm doing this, I want you to keep pausing the video when I'm pointing out a break of structure, and I want you to go mark out break of structures on your account as well. I want you to look at the 1 minute, the 15 minute, the 1 hour, and the 4 hour, and mark out one or two break of structures on each one, okay? So in order to be able to show what a break of structure is, we need to know what a trend is. I know I already talked about it, but I'm going to go over it again. What is a trend? We have bullish trends, we have bearish trends, and we have consolidation. So we have uptrends, downtrends, and consolidation. What is an uptrend? Okay, an uptrend is just higher highs and higher lows. You see that? We're making higher highs and higher lows. What is a downtrend? We're making lower highs and lower lows. Same thing, lower highs and lower lows. And then consolidation, we're chopping. Okay, so consolidation, uptrends, and downtrends. Now, everything is based off of a trend. So you need to be able to point out higher highs and higher lows on any single time frame. You need to be able to point lower highs and lower lows on any time frame, and you need to be able to point out a consolidation zone. So those are three things that you need to know. You need to know them. Next thing we need to know before we look at a break of structure is a high and a low. Now, everyone thinks they know what a high and a low is. No, you don't. No, you don't. So shut up, because you don't. Okay, let's point out highs and lows. We're in an uptrend, right? Or let's do it this way. Let's look at a candle. Okay? Let's look at some candles. Let's get some real chart experience here. Okay, if we are looking at a high and a low, a high is what during one move. So you're on one move, so a higher high and higher low. So we're in an uptrend here. We're going up, and then we're retracing. We're going up, we're retracing. We're going up, we're retracing. So those are higher highs and higher lows. You need to be able to mark out what the most recent high is and what the most recent low is. So in this downtrend, the most recent high, if say we're starting here, is this blue candle right here. This is the most recent high, okay? Then we have a lower low. Then we retrace. So now we're going back up. So now our most recent high, okay, is this right here. Why? Because we retraced. This is no longer the most recent high. Okay, it's when we're in a downtrend, that is. So we retrace again, we go back up. What's the most recent high? Right there, because we retraced. Now we're going back down. Now this is the same thing in an uptrend, in a bullish trend. We're going up and we're going down. So the most recent low, right, is obviously this one. Besides the full sell side liquidity, when we start the trend, this is now the recent low. Okay, we're going up and we're retracing. What's the most recent low now? Right there. We're going up, we're retracing. What's the most recent low now? We're right there. So those are highs and lows. This is the 4-hour chart too. So you can look at this on any time frame, but those are the highs and lows of the chart. Now, let me draw out what a break of structure is, okay? Say we are in a bullish move, so an uptrend, okay? I don't know why it does that. Super odd. But say we're in an uptrend, okay? We're making higher highs, higher lows, higher highs, higher lows. What shows the actual break of structure, okay? So we are obviously in a clear uptrend right now, making these higher highs and higher lows all the way up. So what is a break of structure, okay? In order for a break of structure, we would need to form a downtrend. And what is a downtrend? Lower highs and lower lows. So it's the opposite of an uptrend. So right at this higher high, right now we're still in an uptrend. We come down and we close below this lower low right here. Okay? So we close below this lower low, and then we come. Why is it doing that? Holy shit, man. Christ. Okay, whatever. We come, we close below this lower low, and then we come and we fail to make a higher high. So let me draw that out a little cleaner for you guys, and I'll explain it after. We're making higher highs, higher lows, higher highs, higher lows, higher highs, closing below this low and failing to make a new high. Okay, so what are we seeing here? We're seeing a clear uptrend here. We are then breaking below this low, not just the wick, we're closing below this low, and then we are failing to make a new higher high. So now we are officially in an uptrend or in a downtrend because we're making lower highs and lower lows, lower highs and lower lows. So now we're officially in a downtrend. That is a break of structure. Okay. Now if we're in a downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, we come and we close below this low, we fail to make a newer high. So we're in a clear downtrend with a lower high, lower low, continuing all the way down, and then we come and we close below the most recent lower low. Then we fail to make a lower high. Okay, so now we have this higher low, higher high, higher low, higher high, which puts us into an uptrend. So that's a break of structure on the other direction. Now let's go try to mark. Oh, this is a very good example. Okay, so in this example right here, we are in a clear downtrend, right? Making lower highs, lower lows. This is not a break of structure right here because we did not close above that most recent high. We're still in a downtrend. We're still in a downtrend. Even this right here, we have that retracement. We're still in a downtrend. Right there is a break of structure. Okay, so this most recent high is a break of structure. So right here, what are we doing here? We're breaking structure to the upside. We are now in an uptrend because we have this higher low, higher high, higher low, higher high, okay, higher low, higher high, and we continue that uptrend all the way up. So as you see, we're now making higher lows and higher highs with not one break of structure. This is textbook right here. So this whole time when you're seeing this retracement in this downtrend, right, you keep seeing retracement and you keep trying to take those longs, trying to be the one who can change the market. You're not going to change the market. Okay, now if we were on a lower time frame, this would look much different, but since we are on the 4 hour, let me show you a higher high and higher low. So a higher high and higher low has to be a black candle, then a blue candle. In your case, a red candle, then a green candle. Whatever your colors are, it has to be a bearish candle and a bullish candle back to back. So right here, we have a bullish candle and then we have a bearish candle. Okay, so this is the most recent high. Okay, and now we have all this, right? And we have a new, here, let me ask you something. Is this right here the most recent high? Answer that for me. 3, 2, 1, is that the most recent high? No! It's not. Dumbass. I just said it. I just said it has to be a bullish candle next to a bearish candle. Listen. Take notes. That is not the most recent high because it's a bearish candle, then a bearish candle, then a bearish candle, then a bearish candle, then a bearish candle. So we don't have the most recent high there. Okay? Sorry. Now, so what would this most recent high be? It would be the last candle, right? Because these are all bearish candles, so we don't have a most recent high because it's the candle that starts the downtrend is the candle that you need to see for a break of structure. Okay, you got that? Good. It's right there. This is the 4 hour. So after you get this break of structure, right, we'll get into EMA after, but we have a nice EMA cross here. We blow through it. We would look for a long position, right? So the break of structure is right here. So really, we would want the break of structure. Then, in my eyes, we would want a retracement into EMA. Now, where would your stop loss be? That's totally up to you. I would have it below this fair value gap here. So if I mark out this fair value gap, right, my confluence would be I don't want to see price break through that anyway. So why would I have my stops any lower than that? If it came and broke through that, I would be wrong, and that's okay. You're going to be wrong sometimes. Okay, so we have our stops below this fair value gap, and then what can we target? We can target recent buy side liquidity here. Let's mark them out. We have buy side here. We have buy side here. We have buy side here. We have buy side here, right? So we could target all these things. We have buy side over here. Oh my gosh, this is sexy, man. I don't know where this chart... Yeah, look. We have buy side over here. Okay, we have buy side over here. Now, what happens if we target all of that, right? You'd be in this trade for a long, long, long time. But let's see the RR we could have got off this simple break of structure setup, right? If we try to target all of these liquidity zones all the way up to there, which sneak peek, it's gonna hit. Yo, if this don't stop bugging, I'm gonna be thugging. Sorry. I don't know what the fuck is going on here. Come on, go. Whatever. You get the point. Okay? We hop in here. This alone, not even targeting full buy side liquidity, is a 1 to 4 RR. It's too easy, bro. It's too easy. Break of structures are so important. They're so important. So please go into your chart right now and study them. I want you to mark out break of structures on the 1 minute, the 15 minute, the 1 hour, and the 4 hour time frame, and watch how price reacts off to them. Then, after you do that, we're going to show you how to put it all together, and we'll see the win percentage when you put together a liquidity sweep, a break of structure, an inverse fair value gap, a fair value gap, and an order block. We're going to be printing. You got to understand, you're going to be printing if you just lock in. Don't be a dumbass. Stop clicking buy and sell randomly and actually follow a strategy that has been proven to work. Please, I'm begging you, please don't make the mistakes that I made. Don't make the mistakes that Max made. Don't make the mistakes that Ian made, because we have made so many mistakes. And unfortunately, the best way to learn is to make those mistakes, but that's why we're here. We're trying to get you in the right direction so you can have a much, much quicker, easier, and less stressful path to profitability. Okay? So that is a break of structure. I'm going to be going over order blocks and breaker blocks. So tap into the next video after you go onto your chart and you mark out 8 break of structures and you see how price reacts off of those. Okay? Catch you in the next video. Let's go.